Paul, we're doing these reaction videos. We're getting a lot of hype from. We want to continue our education. I don't want this to be a reaction channel where you're just dogging on people. I mean, the point of all this.
Yeah, you're right.
Double down on that, Paul, about the education while you're eating chips and salsa during the show. Go ahead.
Salsa. One of the things that makes us different, but similar to the guys like Sven Carlin and Gary Mashura, is we believe in process. So to us, the right process over the long term will work. This has been proven time and time again. Everybody else might use the word process, might say things, but if there is no process there, it's not a process. We believe that if you buy things for the right reasons, you're going to miss out on a lot. You're going to miss out on opportunities, but more importantly, you're going to miss out on the big losses. And that's what's most important in investing. Because the second your dollar becomes 50 cents, you have to double to get back to normal. Investing is the only thing in the world where you get punished for being wrong.
You're right.
The best analogy I read recently was in baseball. If you strike out, you don't lose runs, right? In investing, when you strike out, you lose runs. So if you teach the right process and understand how stocks work and how they make more money, you will do better. Will you have the home runs of a stock going up 10 times in 1 year? No, probably not. If you're a momentum trader or a day trader, a chart trader like Mo is, you could get that, which you can get from us too. But our most important aspect of this channel is to teach a process, not just say, go buy this, go buy that.
And I love this woman's process. I've loved her videos for a while. She does updates. She's in the little book that beats the market. She does yearly updates. Of course, last year everyone got slayed prior to that. So her timing is off, but she's really great. So I present to you her Tesla is a huge topic, of course, Paul, and it's very hard to find videos.
She owns Tesla?
I'd like you to see. It's very hard to find videos like this.
Seth, can I say one thing?
Go ahead, Mo.
When we do these reaction videos, there's some bashing, but there's also education that comes into it. We'll point out why it's wrong,
Correct.
and then we say why we think it's correct. Exactly. So there's education behind these two. We are an educational channel. So.
And by the way, just before we get into this video, we are absolutely not brought to you by Webull and Robinhood because those suck. Here we go.
I know I'm going to get a lot of pushback for saying this, but
First off, she's very attractive, which is the most I can say about anybody we've listed so far.
There is no question about it. Tesla is a great company. They have a great story, awesome cars, a big, audacious mission to fight climate change, and a really visionary CEO. But that's just it. Tesla is a great story stock, and Tesla, despite being one of the most retail investors, most of the people who own it have probably never looked at a single financial statement. In fact, did you know that Tesla only recently became profitable? Before 2020, Tesla was a very young growth company that was borrowing a lot of money in order to grow and become profitable. So they financed a lot of its growth with debt, and for a while it was
Do we know how many subscribers? Or are we going to guess that at the end?
Yeah, you're going to guess at the end.
Gotcha.
Okay.
Wasn't sure if this company would pan out. Most recently, the company did post a profit, and they will probably continue to do so. So I think this company is out of the high risk, high debt territory. But still, this is the sort of thing that's important to understand before you invest in a company. Now, I'm
pretty balanced approach.
Investing with Rose, is that what the name of the channel is?
Yeah, Investing with Rose.
Okay.
Pretty balanced approach so far.
Yep.
Yeah.
fully aware that Tesla has some big name supporters, such as Cathie Wood, who's the superstar fund manager of ARK Invest. And for those of you who don't know, ARK Invest is one of the hottest funds right now, and they specialize in
innovation.
Let's not bring up the word disruptive.
They're getting disrupted today. That's
that word makes me just whatever.
Disrupt your pants. Okay.
Innovation. Recently, ARK announced that they're targeting a stock price of $3,000 a share for Tesla by 2025.
Low.
Just to give you a reference point, as of today, Tesla was trading at around $640 a share. So $640 to $3,000 by 2025 is what they're projecting. The cool thing is ARK Invest actually published their valuation model for the entire public to see. So as a huge fan of Cathie Wood, I took the time to...
Oh boy.
She just crushed you there, didn't she?
Is she just saying that to be... why is she saying that?
She's very nice.
She's very nice.
Let's keep going.
She's not you, Paul. This relationship's not going to go well.
Yin and yang.
No, I need the yin and yang. I need the opposite.
Tesla valuation model.
Should you
Now,
said
don't
yin
get me
yang,
wrong,
that's probably
I
not good in
would
this
love to
situation.
see Tesla take over the world. That way we can reverse climate change and save the planet. I just love visionaries like Elon Musk. And no question about it, if I were to buy a car, it would definitely be a Tesla.
If I were to buy a car, where does she live? New York?
Probably California.
No, in California you need cars.
As I was looking through the model, I found myself questioning a lot of the assumptions. I think that ARK's estimates and assumptions they made to get to that price estimate of $3,000 by 2025 is a little too optimistic, and I want to explain why. In this video, I'm going to walk you through 2 reasons why I think ARK's $3,000 price target is too optimistic.
Refreshing.
So far.
And what I think might be a more reasonable price target for
that's
Tesla
where I'm gonna lose her.
Also, I know there's a lot of diehard Tesla fans out
I
there.
really hope she says like
so
$50.
if you think my
She
opinions
won't.
are stupid,
She'll say a number higher than. Do you want to bet?
No, I know that, of course.
It'll be a number higher than 640.
Of course it will.
I'm willing to bet it's gonna be a number
Of course it
higher than
will.
640.
I think it'll be in the
We're all
thousands.
entitled to our own opinions, and you're welcome to share them.
Can we
in
just
the
skip
comments.
ahead to that
I just
number? I just want to see. No, I want to see her. The assumptions she made.
Okay, here goes.
Please make it constructive and to put at least as much thought into your opinion as I have. So with that out of the way, let's get started. Okay, so 2 reasons why I think ARK's $3,000 price target by 2025 is too optimistic. Basically, it comes down to not factoring in what it will take to grow. When ARK came up with their $3,000 projected stock price by 2025, they forecasted a lot of growth over the next 5 years. Tesla produced 509,000 cars in
Here you go, Paul. The numbers. Here you go.
2020, and ARK is estimating that in 2025, Tesla will be producing 10.6 million cars. That's a
You okay, Mo?
Yeah, I just choked on nothing from watching this.
21 times increase in 5 years. Well, actually more like 4 years now because we're in 2021. So that's, in other words, an 84% increase in production capacity per year. While I have no doubt that Elon Musk will pull that off.
Oh, I have amazing doubt.
He'll
of that
sleep
one.
on a couch again and it'll get
I have
done.
incredible doubt that he'll pull that off.
Seth, didn't you say he built your car in a tent?
Yeah, they built the Model 3 line. They got so behind, they put up like pop tent, like domed tents in the parking lot of Tesla to build
I seriously doubt they're going to get
new
that.
lines.
I mean,
4% a year.
And again, we're talking years ago, but the Model 3, the first issues of it, had major problem. I mean, lots of major tiny problems that pissed a lot of people
it's
off.
actually more than
Spacing and
84%
paint.
because we're in 2020 run right now, so it's actually over 100% growth a year.
Here we go.
I believe.
Come on, the guy launched a rocket ship into outer space. So I'm sure he'll be able to do it, but growth doesn't happen for free, right? The more growth you want to create, the more you have to invest. You don't just go from producing 509,000 cars to 10.6 million cars without investing a ton into expanding new factories, getting more equipment, etc. So usually high growth companies like Tesla come up with this money in 2 ways. They'll either
Issuing debt.
borrow a lot of money, which they have done
issue
and are
shares.
doing, and or they will issue more shares of ownership in the company. Since Tesla already has a lot of debt, they're probably going to have to issue more shares at some point.
Check this out, Paul.
The company specifically states in their annual report, which they published in February, that our business and our future plans for
That's a 10K.
expansion are capital intensive, and we may need or want to raise additional funds.
Yeah,
through
and then, by the way, that's a
issuance-
very standard thing said. That's in their, I believe from the look of it, that's probably their risk factors. Wouldn't you
Yeah,
agree,
yeah,
Mo?
yeah, yeah.
That's their 10K, it's the risk factors. But this is what differed between Meet Kevin. This is what differed between Meet Kevin and investing with Rose. Meet Kevin he sat there and said, their shares are basically going to stay the same. It's like, no, if they want to grow to these levels, they have to build factories, they have to build a bunch of other infrastructure in there.
At one point, he did say that they'll most likely go off shares, and you were surprised how flippantly he sort of said they'll most likely increase the number of shares.
Oh, he did say
Yeah.
increase.
That's right,
I thought he
that's
said. I thought he said he would keep the
Yeah.
because I remember him assuming at one point, keep on.
Yeah.
Okay.
Keep on keeping.
Problem is, whenever a company issues more shares, it's great because they can come up with the money to invest in growth, but this causes something called dilution. Dilution is when your piece of the pie gets smaller because there are more people to share the pie with. Just think of a pumpkin pie.
Well said,
I love
Rose.
pumpkin pie, by the way, even though it's not Thanksgiving. So if there's 2 people sharing it, you each get half of the pie. But if 2 more people join in the room, now there's 4 people sharing it, so now you only get 1/4 of the pie. So even though you still own 1 slice, that slice has gotten a lot smaller, and therefore it's not worth as much. So if Tesla issues more shares of ownership in the company, that's exactly what would happen to the value of each share. In other words, if you own 1 share of Tesla now, if they issue more equity down the future, each share will be worth less because it'll be a smaller piece of the pie. However,
Your thoughts so far?
She's spot on.
Yeah, I mean,
I have no comments besides she's spot on.
yeah, right now she's behind Sven on my reaction video list.
Yeah.
ARK's valuation model, they're predicting that the number of shares in the company would only increase by 4 million between now and 2020.
That's so cute.
What? They issue 4 million shares when he takes it when he has diarrhea in the morning. What are you talking about? 4 million shares. All right. They probably issued 4 million shares since that projection came out.
Yeah, here, listen.
As of now, if all employees in Tesla converted their stock options and all convertible notes were converted to shares, that would already dilute the number of shares by 150 million.
There we go. So guys,
Thank you, Rose.
There's two numbers in our shares outstanding on our website. One is, there's two numbers. The bigger one's the one you should go off of because that assumes what she just said. It assumes that every convertible option, everything is actually attained and everyone converts to equity. Go ahead.
150 million. And that's not counting the dilution that would happen if Tesla issues more shares to raise capital.
And hires more people, gives them more options. All these things are a vicious cycle.
Yep.
Yeah, a lot of these projections for these long-term automobiles involve huge companies being built, huge Tesla production.
They have to.
They have
Germany.
to. How else are you going to do it?
Of course. So
I think they will, based on how much they want to grow. So in my opinion, this is one thing that makes the $3,000 price forecast a little too optimistic. Then again, I have a lot of respect for ARK and their thought process, so maybe I'm just missing something here. Another factor that I think makes the price target too optimistic is the number of new industries that ARK is predicting that Tesla will successfully dominate by 2025.
you say this all the time, Paul.
Not only that, I have a hard time even understanding if they're going to dominate the car industry and the EV.
Sure.
She's sitting there saying ARK thinks that Tesla will dominate like every industry they're in.
Yeah, the insurance they'll offer, the solar panels, the energy consumption,
All goes
storage.
as they've planned. By 2025, Tesla would go from being mainly an electric vehicle maker to also being a category killer in the car insurance industry and the fully autonomous ride-sharing industry. So at the moment, Tesla's insurance business is pretty much non-existent. They have some insurance offerings in California, but that's it. So with Tesla Insurance, in the bear case scenario, ARK is estimating that Tesla's insurance business will generate $23 billion in revenue by 2025. But according to IBIS World, the car insurance industry as a whole currently generates $311 billion in revenue per year. That means in 5 years, Tesla would go from 0 to almost 8% market share in a highly competitive, regulated, and capital-intensive industry. It's definitely within the realm of possibility. Again, it's Elon Musk we're talking about here. But the fact that
it's possible. Keep going.
Is it probable?
Correct.
What ARK estimates as their bear case
What's Geico?
scenario,
Does Geico
as
like
in-
15%? I think Geico's like 15% of the auto industry. Maybe. I don't know what the exact number is. What percentage? Let's look at that right now. So
While you're looking at that, Seth, do you know when ARK put out all these projections? Because they're saying 2025. Did they make these in 2018? Or because I'm looking at it, I'm like, man, these are incredibly aggressive projections that they're making for everything that we're seeing.
This video is very recent, so
Wow.
yeah.
I mean, I look at it as, 2025 is basically a stone's throw away.
what percent does Geico? What percent of the market does Geico? Geico's 13% of the market. Allstate's 9%. So they would basically be replacing Allstate.
Now, let's talk about what might be a fair target buy price for Tesla if you were to invest in this company. Wall Street analysts are predicting 38% annual growth in earnings over the next 5 years for Tesla. So that's a 38% growth in profits over the next 5 years.
Now, they slayed that number recently, right? I mean, this past year?
Yeah, probably.
Yeah.
So
They're gonna do
let's
it
do
over
some
and over.
math here. Given Tesla's most recently reported earnings of 64 cents per share, that means with a 38% growth rate, Tesla could have earnings per share of $3.20 in 5 years. As in the day I'm making this video, Tesla stock is trading at around $640. So if you think
That's
of stock
200 to
prices
1.
as a multiple of earnings, that means that right now Tesla is trading at about 1,000 times earnings because earnings of 64 cents per share times 1,000 gives you the current stock price of $640. So in other words, Tesla currently has a price to earnings ratio or PE ratio of 1,000. Another way to think about PE ratios is what you are paying for every dollar of earnings. With a PE ratio of 1,000, I'm basically paying $1,000 for every dollar of earnings. With a PE ratio of say 20, then I'm paying $20 for every dollar of earnings. Obviously, I'd rather pay as little as possible for something, but get a lot back in return. So the lower the PE ratio, the better, because it means I'm getting more bang for the buck. So a PE ratio of 1,000 is very, very high. Now, it is typical for high growth, industry disrupting, innovative companies like Tesla to have really high PE ratios. So a PE ratio of 1,000 is high, but for example, back in 2013, Amazon had a PE ratio of over 1,400. So that's in 2013 when Amazon was still in high growth mode and before it became what it is today. But as you can see, even Amazon's PE ratio dropped in the following years, and now it's currently at 73.5.
I think it's at 62 right now, by the way.
62.
Amazon, I think it's very second, 62.
All this to say, a 1,000 PE ratio seems justifiable now, given all the growth that might happen, but it's probably not going to be justifiable 5 years from now. I'd say as a stretch, a PE ratio of maybe 200 might be justifiable in 5 years. So if analysts' growth estimates are correct and Tesla grows its earnings per share.
She's saying it's worth what it is today then.
From
Oh,
yeah.
That's what she's saying.
Okay.
Oh, no, wait a second. She's saying in 5 years, 200 times 320 is 640. So what it's selling for today is what it should sell for in 5 years, which I still think is high, but go ahead.
64 cents a share.
Assuming no dilution.
20 cents a share. And in 5 years, the P ratio is 200. Then the estimated stock price in 5 years would be $640.63. But wait a minute, isn't that what Tesla's stock price is right now? That's exactly my point. If we're estimating $640 in 5 years, but Tesla is
and that's assuming no dilution.
$640 right now, that means that the current stock price already has all the future growth potential baked into it. The stock has gone up so much that it pretty much reflects the maximum level of optimism for Tesla's future. So to me, at this price, Tesla isn't really a bargain. Now, if the current stock price were more like 400 or something, that would make...
All right, so here's the deal.
Go on.
I'm hoping that she's saying this because she has a YouTube channel and she wants to make sure she doesn't make people mad. Because all of her analysis so far is so thorough and so smart that she understands investing.
Yeah.
I have a hard time believing that she thinks 200 times earnings in 5 years is reasonable, especially at 10 million cars per year. That's a fully mature car company. No fully mature car company is selling for 200 times earnings. No fully mature anything company is selling for 200 times earnings. This is where you got
caught in the Meet Kevin video because the headline was you were comparing Tesla to Ford, you idiot.
So let me ask you a question. Every single industry that Tesla's in, cars, insurance, everything, find me one company that's selling for find me one mature, the market leader is selling for 50 times earnings even.
It's not about Ford. It's about the numbers, right?
But that's what I'm saying. Pick Toyota, pick any car company, pick any insurance company, pick any solar panel company. The market leader on all of these combined, you pay a premium if you think there's a lot of growth potential. They're assuming they're going to be the dominant force in every single company, in every single industry. Google's a dominant force. Apple's a dominant force. They're not selling for anywhere. They're selling for 30 or 40 times earnings.
Exactly.
But it's different this time, Paul.
Exactly. So that's why I sit there and say I think Rose is trying to be a little PC here. Based on her assumptions, I think Tesla is worth $100, $150 in 5 years without dilution. I think she's just listen. She had me until that last assumption. I bet you the cameras are off and she's sitting here right now or we're at dinner for our first date.
Yes.
I guarantee she says, no, I don't think Tesla's worth $640 in 5 years. I don't think it's even worth $400. I think it's probably worth $100.
Subscriber count guess on Rose in her wonderful videos.
55,000.
55,000 what?
Subscribers.
Subscribers.
I'm going to say 100,000.
You'll be happy. 460,000
Wow.
people listen to her. She's got a lot of great videos. She talks about a lot of things. Debt, credit cards,
The reason I doubted it was that high was because of
it's too
she's not
sane.
she doesn't seem like a fanboy. That's why I said 55.
And she sounds
good for her.
Kind of like a value investor, not real. I mean,
she's like on that cusp.
She's on the cusp of it. And Sven always says he's the largest value investing YouTube channel and he has 170,000.
Yeah.
So that's why I went lower than Sven. That's interesting.
Yeah.
Rose, if any of your followers share this video and you want to come talk to us, obviously we're just we have far fewer subscribers, but we're getting there, and we'd love to talk to you. It seems like refreshing. Someone uses numbers and math. With that, fondle the thumbs up.
We're always professional.
Fondle the thumbs up on the way out.
We got suits coming
and that's our take. Yeah. See you guys. Appreciate it.